Hello everyone, good evening to you. Right, it's me Zhong Liang again. Right, I'm going to share with you the STI outlook and the stocks sector by sectors to look at what are we expecting during this festive season for the next 2 weeks, whether STI is going to prepare for the next rally in 2021 or we are looking at a bad start in 2021. Okay, so in this short video, I hope that we can find some interesting stocks to prepare for the year 2021. Okay, let's start with STI. So today we had a bad day or bearish day because of the news of the new mutant strains in the UK discovered. Okay, so we have a heavy selling where STI has broken down its support and its minor support at around 2850 and went down close to its next support at 2799. Okay, so with this movement, it has actually ended the short-term uptrend that was formed from the beginning of the December, and now we are looking at to enter a new trend. Okay, so the new support and resistance that we are looking at is the 2799 to 2876. So the support is 2799 and the resistance is 2876 thereabouts. Okay, so you may also take reference to the 20-day MA. Okay, so you can see STI traded below the 20-day MA, where usually stocks, when the index is bullish, it is always above the 20-day MA. When it's below the 20-day MA, it may start to change a trend unless it goes back up and stays above the 20-day MA. So when we look at the next candle, right, is very important for STI if it continues to sell down to hold at this 2790 level, okay, or if we can have a rebound tomorrow, right, the STI were to close above 2853 and or even better goes above 2874. Okay, so if STI goes above 2874 over here, then we may start to see the index goes back to its bullish movement again, where a breakout will start a new uptrend. But if it fail to break out, then we may start to see a sideways consolidation, then followed by a potential break up or down. Okay, so if we have a break up action, then rather here, to be more precise, a breakup action over here, then we may see in January we have a bull run. But if we have a breakdown action over here, then we may see a bearish January. So it also depends on what time and when these resistance are broken or supports are broken. Because if we have broken the support just before the new year, maybe on the 31st of December, we had a sell down selling to this region, maybe to around 2630 region, where the index found support on the at the 100-day and the 200-day MA, then this may be a signal to tell us that the market is preparing for a January rebound, where it may bottoms up on the at the 200-day MA and then start to recover and trade higher. If the index doesn't break support, meaning to say it holds at 2790, but ding dong in between the support and resistance, and then on the 31st of December, it's closed at resistance. So meaning to say it closed at 2874 resistance on the 31st of December, half day trading. On the 4th of January, we may see a breakout and then the index continue to move higher. So whichever direction these 2 weeks of short-term short period of trading will try to shape up. okay, the next movement. So with that, let's take a look at the banks. The banks have started to form up some interesting movement. So let's look at DBS. So we see DBS trying to break support today, where it has its support at 24.88 and it almost broken it. But at the end of the day, it managed to close above the support, forming a hammer pattern. So this hammer pattern is in fact the second hammer pattern that it has formed, because last trading sessions over here, which is 21st on Monday, it forms a hammer pattern as well. So would this be another signal for DBS to rebound? So the next candle is very important, where we want to see a hammer confirmation. So here, a white candle confirmation above the 20-day MA suggests that we may see more upside towards 2572. So the STI analysis will coincide with the bank. So because STI are actually led by the banks because the banks are the heavyweight, and most of the time we see the banks have a run that would be helping the index to break resistance or support. So here, coming back, where we are looking at if the DBS doesn't have confirmation and start to hover below the 20-day MA over here for the next few trading session. Okay, again, it depends on when the movement comes in. So if the 31st of December, the movement ends up to be around here, 2572, then beginning of January, we may start to see the breakout happening in 2021. So it is similar for OCBC. Okay, OCBC, why did I say similar? I beg your pardon. Why I say similar is because you notice that OCBC is also within a trading range, similar to DBS, but it doesn't have a hammer pattern, but it managed to hold at support level. Okay, so if it's continue to ding dong within the range at 988 to 1023, then we got to see where it ends on the 31st of December. So if it managed to hold above 98 and then close at 1023, we may expect a breakout next year, next January. Same for UOB. UOB is also in a trading range. Okay, then if it's within the trading range for the next few days of trading, in fact, we only have around 5.5 days, rather 5 days of trading left. So next week 3.5. Now we have 1.5. So we have 5 days of trading days left in 2020. So it depends on how the banks will move. Now the banks can also break its support and find its lower MA as support, and then start to bottom up in January as well. So it depends. So there's a lot of multiple movements that can happen. And if I were to project an outlook, where can it be? Of course, if the market can control, or rather the countries, most of the countries can control the COVID situation, then we may see a 2021 early rally. But of course, you can see that January is a bullish month typically, and if this bullish month turn to be a bearish one, then definitely something got to be bad. So COVID is probably one. It will be one of the reasons. And if COVID were to turn the market seriously bad, then we would see the medical counters will go up. So when we see the rest of the blue chips are going down, then the medical counters definitely has its chance to recover, because market will see that the high demand for the medical equipments, the gloves, will continue to stay high. So if you look at MedTech over here, MedTech in fact went up to test its resistance at 107, but didn't manage to break it. It closed at its 50-day MA. So seemingly the market is trying to tell you that, hey, the 50-day is blocking it, but it may not be the case tomorrow because it may break above its 50 or pierce above its 50 and break above 107. Looking at the these higher lows that you can find, you can actually plot the trend line and you realize that there is a so-called positive action in MedTech. So if MedTech can break above its 107 resistance, the next key resistance above its 100-day MA is 1.24 level. Okay, so it really now boils down to how the market view COVID situation. So the bullishness in the tech sectors will means the demise of the banks. So the banks may continue to go down lower and break support and then go down lower, while the MedTech may break resistance and go up higher. So of course, this will be the same for UG Healthcare, where you can see that it holds at its 200-day MA. If you recall last week, I mentioned about the hammer, and then today it actually rallied to its 20-day MA and seems to be blocked by the MA, similar to MedTech, seems to be blocked by its resistance. But the MACD and stochastics are pretty bullish. So what we need is UG to pierce above its 20-day MA, and stays above its 20-day MA, and the next resistance to watch is actually 7.3 over here, okay, or 7.25, 7.3 levels, okay. And here we have Riverstone, very similar. You realize that this sector stocks, they have a very similar movement where most of them will be, having either the same indicator signals or they are either blocked by their own individual moving averages, etc. So you can see Riverstone is also right at this 20-day MA, and look at the MACD. Isn't it the same? And look at stochastic, isn't it the same as UG? Or if you want to compare to Top Gloves as well, later on we'll take a look at Top Gloves. So Riverstone has to pierce above its 20 and then retest its 200-day MA at 131 and break up from there, then we can start the new trend. Okay, so so which one is going to be? So we're going to look at how the US market perform as well, because now the market is very susceptible to news, and then we are looking at currently the futures, the Nasdaq is positive and S&P is positive, but Dow is slightly red, and the Europe is doing not too bad as well. So will this recovery from the market be the end of the medical counters, where they are not ready to break resistance, but rather to pull back to form another signals? Okay, so definitely I'm not going to chase these medical counters on the breakout. So I would rather wait for it to break up higher, then pull back to support, and then watch for a re-entry signal. So let's look at the Top Gloves here. Look at the MACD, very similar. So Top Gloves is at this 20 as well. So everybody is at this 20. So once they clear their 20-day MA and then retest higher resistance, right? Watch for pullback, watch for a re-entry. Now, a typical example is on MedTech. In fact, I have in non-MedTech, I should have actually posted it in the email, because if you look at MedTech, it actually rebounded, pulled back at its support level, at its 20-day MA support, and then here, in fact, there is an entry, and of course, today we see more upside. Okay, so why here there's an entry? Just to point it to be more clear, because you can see indicators are actually pointing upwards, and it is rebounding off from its MA support. It's just that the recent volatility in the medical counters has taken a big toll in my appetite, or rather my appetite for all these counters has reduced because of its volatility. It swings up and down so strongly and caught you off guard most of the time. That's why I ignore all these medical counters for the time being. So is it time to relook at these medical counters? Again, the vaccine effect is very important, because the US expert was saying that the vaccine is expected to fight against or be effective against the new strain. So more and more news is, or rather result is required. Then in that case, then we have more volatility in all these medical counters, and of course in the market as well. So do take care of your positions. So if you are still interested, keen in all these medical counters, do not overexpose yourself, so that when you cut or when you run, right, it's easier to run. Okay, so these are the medical counters. Because then if the medical counters are up, then you will find that all the recoveries counters are down. So when we say recovery counters like SIA, ComfortDelGro, Genting, then we have of course those peripheral counters like SIA Engineering that support the SIA flights in terms of these what we call servicing, and then ST Engineering. So all these counters will face the hit. And and let's take a look at them. So we have ComfortDelGro. Let's take a look at ComfortDelGro first. So ComfortDelGro, as you can see here, there's a 20-day MA rebound here. So before we go into the latest action, right, then we can see upward movement, but we start to see pullback on Friday, and they continue to slide down. So this is actually not a good sign, because first of all, it's below the 20-day MA. Second, it has a lower high, and this becomes a challenge for ComfortDelGro to rebound higher. So I must admit, I'm a bit greedy here. So my entry was 166. It went to 174, 175. I was expecting to sell at about 180, but I did not take profit, because I'm waiting. I'm looking at the trend is still intact, but today's action actually destroyed the trend. So it comes down to the question whether should we continue to hold this counter or just cut at break even. So currently I'm just very near to break even. Now it closed at 166. In fact, it's break even, and just comms involved. So whether should we hold or cut this position, it depends on tomorrow's action. So if tomorrow continue to slide down, test support, then we have to prepare to exit, because once it breaks support, it may continue to go lower. Especially you look at MACD, is also not doing well as well. It's moving down over here, and we have this support, especially to watch, right? If the indicators are moving down, if it breaks the 161 level, it is a topish breakdown. As you can see, there's a downtrend line. If I were to draw, then it will be a look like a descending triangle, and it could possibly turn the counter back into downtrend. And of course, in Singapore, we have more and more COVID cases. First, we have the Marina Mandarin case, where the staff, it is very similar to the March situation, where the outbreak started in a hotel, and then we start to see the NCD, the contagious the clinic start to have a lot of employees getting tested, and then very, very similar now. And we have one lady, 39 years old, going to this Southern Island tour and then start to get contacted with COVID during the tour. So all this uncertainty has taken a toll on ComfortDelGro, and of course, yeah, the chart start to form topish formation. Then we got to take notice of it and then run if needed. So 161 will be a critical level for ComfortDelGro. Let's hope that you don't test it. And of course, we have SIA talking about the transport sector first. SIA, despite successfully transported vaccine to Singapore, broken support with increasing searching volume, and this is not a very good sign. So it is very close to support level here, and if it continues slide down and breaks below this support, then it may retest the $4 or 3.99 level. Okay, so for those who doesn't have SIA, if you start to see SIA hit this level and the news of COVID being controlled again, then there might be some rebound. So here you can start to look at SIA to pick up SIA. Now, if you follow through my email, just to backtrack a little bit, right? We actually expected SIA to break out here due to the vaccine, but there isn't any breakout happening. So in fact, it broken down. So that's why we got to relook at SIA and then watch for a new trading opportunity. Right? For those who had somehow shorted SIA for some reason and then expecting a breakdown, watch for this support as well. And then we are going to talk about the property sectors. So let's take a look at CapitaLand here. CapitaLand was moving on a very nice uptrend, and today it actually pulled back. So the good thing here is it managed to hold at the support level, its 20-day MA support, and then its previous resistance support. So here it's very important for CapitaLand to rebound so that it can continue its uptrend. And now we have a new minor resistance at 3.32. And we need CapitaLand to retest this level and break above this level. So what are the chances? Tomorrow's candle is very important. So it's going to be pivotal to CapitaLand's recovery. So if CapitaLand can move up higher and close at 3.26 level, we may have a chance. Okay. Then we have city development. Previously in my email, I've actually posted the potential ascending triangle, as you can see from the chart over here. Let's turn off the indicators to get clear. Okay, so we have the entry reference at 809, stop loss at 780, and then expected the target, the counter to move to target at 866. But unfortunately, it broke out but did not follow through, so it actually pulled back and destroyed, so-called destroyed the ascending triangle. So it has came down to flirt at its stop loss level, but it closed higher. So for those who didn't stop loss, it's fine, right? You can continue to hold. But if this city development were to come back down, you got to watch. So you got to decide whether you want to cut loss or wait for this support level. So because this support at 769 got to hold in order for city development to move into the next direction. Okay, so with the ascending triangle so-called destroyed, so all the targets is gone. So now we have the new, we got the new direction to look at. So first we have the resistance. So major resistance at 807 to 810 region. Then we have the support. So here, if it ding dong between support and resistance, then we may see sideways. But if we were to break support all the way down, 750 broken, then we may see start of a downtrend. Why? Because imagine this: if city development were to come down and test its support, then we will have a topish formation, and this topish formation will carry a projection level, where we may see city development breaks down and goes back to where it started around here at target to be 696. So where is it going to be? It depends. Yeah. So it depends on where the stock price is going to be the next few days. So the next 5 days of trading is very important. Then Genting. So we're going to go to recovery counters again on Genting. So here Genting did not manage to continue its upside. So initial target was at 92 and the next one was 965. But Genting went as high as around 89 cents, very close to 90 cents, but it did not follow through. It actually had a selling back to its support level. So at this important support, this is where we need Genting to rebound. So if we were to do a bounce out strategy trades, if the market is able to shake off the so-called the bad news and then start to look forward for recovery, then we may want to see Genting go back up above 865. Then after that, we want it to retest 895 and break up from it. Then the next resistance to watch is 92. So what are the chances? Very important rebound or closing tomorrow 865. Why? Because once it close higher, MACD will start to turn up and show positiveness. As of now, MACD is moving down. If support continue to break, so the important support to watch is 82 cents. So if support continue to be tested at 82 and even broken, then we may see Genting continue to slide down all the way to 775. So it's very important to watch. Then we have the next counter that everybody is looking forward to. Because we have SIA SATS. Yes, SATS. SATS had a very bearish day today. So it has a consecutive selling of 1, 2, 3, 4, 5, 6. So on the 6th day, it so strongly breaking down from this the topish formation where you see a decent triangle. The selling is so strong with a high volume that it broke down, and we may see a downtrend if it cannot close above 407 again. Okay, so SATS is actually bearish right now. And looking at the support level, the support is the next support is quite far. It's actually 3.7, $3.70, and MACDs are going down. Okay, so for those who have not shorted earlier at above $4, maybe at 406 is the first entry to short. It's fine. Just let it go down to below $4. Watch for support and look for an opportunity to get into this counter. Okay, I think SATS are very affected by the COVID strain. Okay, so so this is a very bearish moment for SATS now. So got to watch further. So stay off SATS for the time being. Just wait patiently for a good entry. Okay, now coming to the oil and gas counter. So we have Keppel Corp. Keppel Corp actually is not that bad. It managed to hold its support level, and the uptrend hasn't really been broken yet. So let's see whether Keppel Corp can eventually break out above from its resistance at 542 to 547 and then resume back its uptrend. So it's very important to go and test resistance, because if it can't test resistance, means that eventually the MACD and stochastic is suggesting that this counter eventually may be lower. So we got to look out for support level. So it's pretty tight for Capital, or rather Keppel Corp, because its support it's very close, 516, and then at $5. So we shall see where Keppel Corp is. Sembcorp Marine, disappointing. The so-called merger talk seems to be shelved because the share price has broken lower, has traded lower, so rather it's broken it below its 50-day MA, and here we got to start again and look at where the stocks going to hit to. So the support after 50-day MA is actually at 135. Now we got to look at where it's going to be. First, it must hold at 135. Second, it must rebound from 135 to retest its 20-day MA and eventually break above it. But for now, I don't see any bullish sign for Sembcorp Marine, except that I find it's kind of interesting to see Stochastic having a bullish crossover, right? But of course, we need a white candle confirmation the next day. Personally, I'm not interested in Sembcorp Marine, but it's just an analysis for those who are interested. Yang Zhejiang, very funny, announced the contract wins today, but broken support. Okay, so is this the sign to tell us that for chartists we should cut loss and run? So it's very funny. It seems like Yang Zhejiang is kind of like anti-chartist. Why? First of all, of course, we see the break of support here with humongous volume. As I explained before, MSKIs are selling. Then after that, it had a strong rebound all the way up to the target. If you follow my email, my target is actually 9899 range. And then after it hit the high, it begin to sell back to support level, sell down back to support level, and today break support, but volume isn't that high. So is there going to be a rebound tomorrow? For Yang Zhejiang, is kind of a tough counter to trade for those who are trading. So probably you got to wait a little bit longer for the real movement to come. Okay, so for the time being, I'll be watching very closely how it react over here at this range, and definitely going back to 90 cents is not preferred. Hopefully, it can rebound from here. Okay, it's very funny. A counter that has win contracts over contracts has a positive result. Start to form bearish charts. Start to form bearish chart over here. So over here we are going to okay. So we're going to continue to watch Yang Zhejiang. Definitely one thing for sure, after trading Yang Zhejiang for so long, right? It is definitely not a counter for you to hold for long term. If you don't like its movement, because it has been swinging up and down with no trend. So when it hit to resistance, it's time for you to take profit. Then when it comes back to support level, then you can look for an entry. So I think that's the best way to trade Yang Zhejiang. Okay, so the next one we are going to look at, well, we have the tech sector. So last but not least, the last sector that we're looking at is the tech sector. So we start off with venture. Venture surprised me over here. As you can see, we were plotting the potential downtrend for venture already, but there was a strong surge in movement here with volume surge as well. So we see it start to pierce above its downtrend line, and therefore negating this breakdown, and start to go back to it supposed to be where, which is sideways. Okay, now it had attempt to break out but failed to break out and pull back on light volume. So that now that I mentioned earlier was actually trying to say that if you were to look at the venture, it has actually formed a pattern, a flag pattern, very crucial for a breakout and a white candle breakout. So if you see this counter form a white candle over here, breakout above with volume around 1.34 million, then we may expect to see more upside. But if during the intraday you see a white candle, strong white candle here, but at the end of the day, right, the candle turned out to be something like this, then it is a bearish sign, because this is a sign of breakout failure. Okay, so before I show you example, right, if it can break out like this, then you can expect venture to continue to hit higher to around 20.22 level. Okay, now the failure that I want to show you is on AEM. So this counter apparently has a so-called flag pattern, and the next day it broke out strongly with volume increasing, but at the end of the day closed lower. So this is a sign of a breakout failure, and the next day open lower, now trade back to support level. So how disappointing. So we can see that this counter has lower highs, but the positive takeaway is it doesn't have lower low yet. So it's very crucial for it to hold at this support level at 335, and then we start to see some rebound. If not, if it breaks below, then it may be a challenging moment for AEM. And definitely, I think this counter is lack of catalyst to move up. So the result announcement definitely has to come in to help it to move up. So based on the last projection, they are expected to make more profit because the revenue is going to go higher, and the net profit is, of course, definitely is going to go higher. So we're going to see how this counter pans out. So watch for 335 support level. So the signal that I posted in the email negated right now. So we're going to look for new signals over here. Then we also have UMS disappointing because after I have a anticipated an upward movement. So this counter actually moved up to test 107, but today it actually closed back to where it began off. So the consolidation continues. So the next thing to watch is support level. If it continue to go down, will be at $1. And we still need to wait further for the next potential direction. Okay, so just to plot the chart clearer, 107 becomes resistance now, and then we have $1 support. So it may ding dong within this range. So got to watch further. So the next Friday is again very important. Then finally we have Franken. It announced impairment loss of 6.2 million last night, and coincide with the market sell down, it get down and then go back to support level right away. So 118 support level held because this counter closed at 120. So the next question here is, will it be able to rebound to fill up the gap or breaks below its 20-day MA to start to change another trend? So I'm going to watch further, not going to take action on Franken. I have exited the position, so I'm going to watch further on how Franken is going to behave going forward. But do take note, there might be a potential change in trend because MACD histogram is showing bearish divergence. So this is a crucial time for Franken. It may swing sideways or it may rebound halfway, fill up the gap, and then start to form a downtrend sign. Okay. But I must be honest, the impairment loss of 6.2 million is not a huge sum to begin with. So for market to react like this, there might be something else. Okay, so watch for the support level. Okay, so with this, Franken comes to an end for the video. So if you like to ask questions or you have any stocks in mind, you can always WhatsApp me and then we can discuss it one-to-one, or I can actually analyze it on the next video sessions. So with this, have a merry, happy new year ahead. Okay, so let's hope that 2021 will be a much better year than 2020. Okay, so take care and have a good day rest.